I'm about to hand you my ultimate checklist to close cheap when buying your first home. Forget the stress and confusion. This is your roadmap. It's simple, it's fast, and it's meticulously built to save you thousands of dollars in real cash. Let's dive in. Number 1, the credit tune-up. This is your foundation. A strong credit score is your single most powerful negotiating tool for a lower interest rate. First, pull your credit for free from all 3 bureaus. Don't use a third-party app. Go directly to the source, mandated by federal law. Scour those reports and dispute every single error, no matter how small. A wrong address, a misspelled name, or a debt that isn't yours can drag you down. Then, aggressively pay cards down to under 30% utilization. If you can hit 10%, you're in the Goldilocks zone. This shows lenders you're a responsible borrower. A 20 to 40 point boost isn't just for bragging rights. It can literally drop your interest rate and your monthly payment for the life of the loan. Number 2, get pre-approved by 3 lenders. This is non-negotiable. Do it on the same day with the exact same info to ensure a true apples-to-apples comparison. Ask for a formal loan estimate from each and compare the APR, not just the interest rate. The APR includes fees and gives you a truer picture of the cost. Next, compare all the lender fees. Look for things like origination, processing, and underwriting fees. Compare the points. Are they charging you to buy down the rate? Is it worth it? And finally, compare any lender credits they're offering you, line by line. Once you have the offers, make them compete. Tell lender B what lender A offered. This is where you find real savings. Number 3, ask for lender credits. This is a powerful but often overlooked strategy. You can trade a tiny rate bump, say 0.1%, for thousands of dollars off your closing costs. Always run the 5-year math to see your break-even point. If you think you'll refinance or move within 5 years, taking the credits is almost always the winning move. It keeps more cash in your pocket right now. Number 4, hunt down free money. Seriously, it's out there. Look for state and city first-time homebuyer grants. These are designed specifically for people like you. Research down payment assistance programs, which can dramatically lower your upfront cash needed. There are special programs for teachers, healthcare workers, and other public servants. And look into community seconds, which are silent second mortgages that are often forgiven over time. Billions of dollars in these programs go unused every year, simply because people don't know they exist. The key is to apply early, as funds are often limited and distributed on a first-come, first-served basis. Number 5, the timing hack. Your closing date can save you money. Close at the end of the month to dramatically cut your prepaid interest, which is one of the biggest variable closing costs. Pay attention to the market and lock your rate when volatility is low, like midweek, avoiding the turbulence of Fridays. And always ask your lender for a one-time float-down option. This lets you snag a lower rate if they drop before you close, but protects you if they rise. Number 6, shop absolutely everything. Your lender's recommendations are a starting point, not a requirement. Home insurance, title insurance, escrow services, even the notary services are shoppable. You have the right to choose your own providers. Your goal is to get at least 3 quotes for each service. This can save you hundreds, even thousands. For insurance, bundle your home and auto policies for an easy discount, and raise your deductibles smartly. A higher deductible means a lower premium, just be sure you can cover it. Finally, verify all so-called junk fees. If you don't know what a fee is for, question it. Number 7, Power Inspect. This is your get-out-of-jail-free card. Always, always, always do a home inspection. Waiving it is one of the costliest mistakes a buyer can make. Then, use the report to ask for seller credits instead of repairs. Credits directly lower your cash to close, while repairs just fix the seller's house on your dime before you own it. Number 8, concessions are back. The market has shifted. Use it to your advantage. Ask for seller-paid closing costs. It's a common and powerful way to reduce your upfront expense. Ask for rate buydowns where the seller pays to lower your interest rate for the first few years. Ask for appliance credits if the washer, dryer, or fridge are on their last legs. If the market is slow in your area, or a house has been sitting for a while, aim high with your requests and negotiate down. Number 9, don't fall in love with just one house. This is business. Keep 3 viable options live at all times. This emotional detachment gives you immense negotiation leverage. Your single greatest savings tool is the genuine ability to walk away from a bad deal. Number 10, PMI Judo. Use the weight of private mortgage insurance against itself. If you're putting under 20% down, you'll have PMI. Keep it cheap by improving your credit score before you apply. And compare lenders, as PMI rates can vary significantly between them for the same borrower. After closing, track your equity like a hawk. The moment you hit 80% loan to value, petition to have your PMI removed. Or, if rates have dropped, you can refinance to get rid of it even faster. Number 11. Buy the payment, not the price. The sticker price is just one number. The monthly payment is your reality. Before you even look at houses, set a total monthly payment you can live with comfortably, leaving room for savings in life. Then, work backwards. Choose the combination of loan, concessions, and price that hits that payment number with the least cash out of your pocket. Number 12. HOA and taxes matter a lot. A home with a low price but high HOA fees or property taxes can easily cost you more each month than a more expensive house in a different area. Always compare the total monthly payment. Petit. Principal, interest, taxes, and insurance. Not just the sticker price. Number 13. The house hack starter. Think like an investor from day one. Consider buying a small multi-unit property, like a duplex or triplex. You can live in one unit and rent out the others. Or look for a single-family home with a rentable room, a finished basement, or an accessory dwelling unit, ADU. That extra income can dramatically offset your mortgage, accelerate your savings, and build wealth faster than you thought possible. Number 14. Freeze your life. From the moment you apply for a loan until the keys are in your hand, become financially boring. No new car loans, no new credit cards, no big purchases on credit until after closing. Don't even co-sign for someone else. Lenders recheck your credit and employment right before funding. Any new debt can jeopardize your entire loan. Number 15. Earn cash back on the hunt. Get paid to buy your house. Some modern brokerages offer commission rebates to buyers. Many credit unions have homebuyer programs with built-in rebates, and even some large employer programs offer buyer rebates as a perk. You have to ask, this is free money that can amount to thousands back in your pocket at closing. In this game, every single dollar counts. Number 16. Write a clean offer, not just a pricey one. Sometimes terms are more attractive than top dollar. Offer short inspection periods to show you're serious and won't drag things out. Include your strong pre-approval letter to prove you're a qualified, low-risk buyer. And offering flexible closing dates that align with the seller's timeline can often beat higher bids without you having to raise your price. Number 17. Verify the math. Again and again. Request a fees worksheet from your lender early in the process. Then, you'll get the official loan estimate 3 days after you apply. And finally, the closing disclosure 3 days before you sign. Compare all 3 documents, line by line. The numbers should be consistent. If numbers jump unexpectedly, ask why immediately. If you don't get a good answer, demand they fix it, or be prepared to switch lenders. Number 18. Keep a post-close cushion. Don't drain every penny to get into the house. Aim to keep at least 1 month of total living expenses in your savings account after closing. 3 months is even better. This is your emergency fund, so you don't have to rely on high-interest credit cards when the water heater inevitably breaks. Okay, bonus round. Let's turbocharge your savings with a few pro tips. First, ask your bank about relationship pricing. Some banks offer rate discounts if you have checking or investment accounts with them. It's an easy ask that could save you thousands. Next, appeal your property tax assessment. As soon as you close, check the assessed value. If it's higher than your purchase price, file an appeal. This can lower your monthly tax payment for years to come. Consider a 15-year mortgage if you can afford the higher payment. The interest rate is significantly lower, and you'll build equity at lightning speed, saving a fortune in interest over the life of the loan. Can't swing a 15-year? No problem. Just make 1 extra mortgage payment per year, broken up over 12 months. You'll shave nearly 7 years off a 30-year loan. Buying a home is emotional, but saving money is a mechanical process. Use this checklist, keep your leverage, and let the numbers make the final decisions for you. You've got this, and you absolutely do not have to overpay to become a homeowner. Save this video, share it with a friend, and go get your keys. APR versus rate. APR includes lender fees and points. Compare APR, not the teaser rate. Paying 1 point, break-even months equals cost divided by monthly savings. Example, $300,000 loan, 1 point equals $3,000. If you save $40 per month, break-even is about 75 months. Plan to move or refinance sooner? Skip it. Credit hack. Keep utilization 28 to 33% or lower. Pay cards before the statement date so the reported balance is low. Collections. Medical collections under $500 are often ignored by scores, but lenders still see them. Verify and fix your reports. Prepaids versus closing costs. Taxes. Insurance. Origination. Title. Negotiate credits for costs first. Rate lock timing. Watch CPI and Fed weeks. Lock midweek. Lock midday. Avoid volatility spikes. Avoid Fridays. Insurance bundle. Auto plus home can cut 10 to 20%. Example, $1,600 premium at 15% off equals $240 a year saved. Inspections. Older systems. Ask more. Sewer scope. Roof inspection or opinion. HVAC opinion. Ask for seller credits. Cash beats pre-close repairs. HOA fine print. Budget for dues increases. Ask for the last 2 years' meeting minutes. Ask for the special assessment history. Seller credits cap. No limits. Conventional. 3% with less than 10% down. Conventional. 6% with 10% or more down. FHA. Up to 6%. Don't overcredit and lose benefits. Appraisal gaps. Use an appraisal contingency. If it comes in low, negotiate a price drop. Or ask for a seller credit. Post-close cushion. Keep at least 1 month of expenses. 3 months is ideal. Protects you from surprise costs. PMI exit. Track your home's value. Request removal at 80% loan to value. Don't wait for the 78% automatic. Save this checklist. Share with a friend. Subscribe for more money-saving homebuyer moves.